Washington, as lawmakers look to rehabilitate the deepindebt National Flood Insurance Program, they're turning their focus to one of its most complicated problems: multiple loss properties. These are the homes and businesses that repeatedly flood, leading the owners to file multiple claims. And while they're just 2% of the program's 5 million policies, they account for roughly 30% of flood claims, about $17 billion paid over the program's history, according to the Federal Emergency Management Agency. The program could receive a boost as the House approved a disaster relief bill that would forgive $16 billion of its debt, a decision that now heads to the Senate, but both the White House and Dallas Rep. Jeb Hensarling, chairman of the House Financial Services Committee, say changes are needed to bring the program closer to solvency. House passes $36.5 billion disaster relief bill that Greg Abbott blasted for lack of Harvey aid. Hensarling, a Republican, wants to step up buyout and mitigation efforts, while he and the White House both support measures that would make it easier to deny or drop coverage for some of the most flood-prone properties. As a card-carrying member of the Fiscal Conservative Caucus, I'm here to say we'd be better off spending a whole lot more money on the front end to buy out these homes or to mitigate than we would spending hundreds of billions of dollars on the back end, Hensarling said in a September interview with the Dallas Morning News. Most say addressing multiple loss properties is common sense, but that could be nerve-wracking for homeowners like Michael Bolton, whose Northwest Houston home has repeatedly flooded over the past decade. Bolton lived there for 17 years before it first took on significant water during Hurricane Ike in 2008. He had flood insurance, though he wasn't required to carry it, unlike those who have federally backed mortgages and live in high-risk flood zones. His house has flooded 3 more times since Ike, with payouts from the federal program totaling more than $205,000, not including Hurricane Harvey damage. According to his most recent appraisal, his property is worth $206,000, down from $230,000, he said. He looked into elevating his home, but one contractor told him it would cost $100,000, and another warned it would collapse if he tried. He applied for a buyout from the Harris County Flood Control District, but was rejected last year in a district with thousands of more problematic homes. He put his property on the market earlier this year, but has received interest only from investors offering him half its value, he said. Now, as he watches neighbors cut their losses and move after Harvey caused the latest round of flooding, Bolton, 57, is weighing his options. If I had no equity, I'd walk away, he said, later adding, I'm too old for this proposed legislation. One of the measures Hensarling's committee passed earlier this year, as part of an upcoming 5-year reauthorization of the program, would phase out existing discounts for some multiple loss properties. It would also increase the federal assistance for mitigation and buyouts, something a committee spokesman said could help people like Bolton. Dallas Rep. Hensarling pushing for overhaul of federal flood insurance program. Wisconsin Rep. Sean Duffy's 21st Century Flood Reform Act would also create a category of extreme repetitive loss for structures that have at least 2 separate flooding claims and payouts exceeding 150% of the maximum coverage value. The legislation would give the program authority to deny continued coverage to those policyholders if they refuse a mitigation offer. The White House wants to go even further, allowing the flood program to drop coverage for extreme repetitive loss properties if it is not in the best interest of the program's financial solvency to renew coverage or make an offer of mitigation. Office of Management and Budget Director Mick Mulvaney wrote to congressional leaders this month. Last week, the House left out the Financial Services Committee's proposals in its disaster aid bill, prompting Hensarling and a handful of Texans to vote against it. Without changes, the flood program will continue to subsidize and encourage people to live in harm's way, putting their lives and property at risk, Hensarling said in a statement. This is unacceptable. Floods water surrounded houses and apartment complexes in West Houston after Hurricane Harvey hit. Jabin Botts for The Washington Post. The flood program's debt ballooned after Hurricanes Katrina and Sandy, and it maxed out its $30.4 billion borrowing limit soon after Harvey and Irma. Harvey could cost flood insurers $11 billion, but funds are running out. But several environmental experts say its problems were long in the making, in part because cities like Houston developed before federal flood maps were drawn. What's more, many say the maps, which insurers and government officials use to assess risk, are out of touch. Rice University and Texas A&M researchers found that FEMA's flood maps for southeastern Harris County missed about 75% of the damages from Hurricanes Ike, Allison and 3 other storms. According to the Associated Press, FEMA's concept of flooding and floodplains is outdated, said James Blackburn, a Rice environmental law professor, who said the maps don't adequately account for rainfall changes and development-induced flooding. Blackburn contends the very program intended to shield property owners from catastrophic loss is partly responsible for why many have remained in flood-prone zones. Because if we had not been able to insure these houses that flooded, you would have seen them abandoned long ago, he said. Congress must step up its buyout efforts, a sentiment echoed by National Flood Insurance Program Director Roy Wright in September. For people like James Wade, who oversees the buyout program for the Harris County Flood Control District, that's welcome news. The district has identified about 3,300 homes it wants to purchase to alleviate chronic flooding problems. It would need a whopping $650 million to do it, he said. As of early October, his organization had just a fraction of that amount, about $24 million, from two separate federal grants. You have to make recovery funds available immediately so that you capture the people before they rebuild and say, you know what, I put time and money in, I don't want to leave now, he said. Or before they sell to an investor, and someone else moves in. According to FEMA, which houses the flood insurance program, Texas has received more than $331 million in hazard mitigation dollars to buy damaged homes since 1989. Harris County has received the bulk of that money, about $122 million. Dallas County, by comparison, received just over $1 million in 2008. Looking ahead, Indelic, the head of the Plano-based Floodplain Alliance for Insurance Reform, said that problems with the flood program are broader, deeper and more significant than multiple loss properties. Over the years, the program has been slammed with accusations of fraud and mismanagement, not to mention overcompensating private insurers who help sell the policies. He isn't optimistic that Congress will succeed in approving a major overhaul before its spending bill expires in December. Lawmakers in both the House and Senate have larger disagreements, such as whether to bar the program from insuring new construction in flood zones, how to address compliance issues, and over raising rates, which many fear could discourage new customers or cause others to drop coverage. But despite the challenges, Felix Docent view the federal program as an abject failure, as policyholders have paid into it, he said. If you look at the program as an actuarially sound program, it's flawed, for sure, he said. If you look at it as a disaster relief program, there's not another on the books that's been more successful.